You're welcome to my channel. In this video we are going to be looking at some multi-choice questions in accounting 2. We shall start with single entry and incomplete records. Section A says read the following questions and answer with true or false. The first question is, single entry is an incomplete and unrealistic system of recording transactions. Is it true or false? The answer is true because single entry is all about incomplete records. So for number 1, the answer is true. The answer is true. Then number 2, under single entry, a trail balance can be drawn. In single entry, among the accounts that we have, there is no trail balance. We have the statement of affairs, cash book, debtors and creditors account, and then others, but there is no trail balance. So for question 2, the answer is false. Then for question 3, in pure single entry system, only personal accounts of debtors and creditors are recorded. It's true, we only prepare those two accounts, those two personal accounts of debtors and of creditors. So for question 3, the answer is true. The answer is true. Then question 4, in single entry, real and nominal accounts are also maintained. Real and nominal accounts are also maintained. Nope. So the answer is false. Then for question 5, a cash book or cash account is opened only in the case of simple single entry. When we are solving single entry problems, we prepare a cash book. So the answer is true. Then question 6, in simple single entry system, only personal accounts of debtors and creditors along with the cash book are prepared. We prepare the debtors account, creditors account, and then a cash book. So for number 6, the answer is true. The answer is true. Then for number 7, quasi single entry system is also known as partly single entry system. Which is true. Quasi is the same as partly single entry system. So the answer is true. Then number 8, in quasi single entry system, other subsidiary books such as purchases book, sales book, etc. are not maintained. We always need the purchases book and the sales book to determine either the purchases or the sales. So they are maintained. So number 8, the answer is false. Then for number 9, in quasi single entry system, personal account plus other subsidiary books are maintained. The answer is true. Personal accounts of debtors and creditors and other subsidiary books are maintained. So the answer is true. Then number 10, Number 10, posting from cash book is only made to a personal account in case of single entry. Yeah, the answer is true. Then number 11, single entry system cannot be applied in case of maintaining accounts of joint stock company. Single entry system cannot be applied in case of maintaining accounts of joint stock companies. Yeah, joint stock companies. Yeah, the answer is true because we do not apply it. Single entry mainly applies to sole proprietorship things and partnership. It doesn't apply to companies. So single entry cannot be applied in case of maintaining those accounts. The answer is true. Then for question 12, single entry system cannot be applied in case of maintaining accounts of sole trader and partnership. Here the answer is false because single entry is mainly applied in sole proprietorship and then partnership businesses. So for number 12 the answer is false. Then number 13, preparing of a final account is difficult in case of single entry. Yeah, the answer is true because you have to go through very many steps. Let me first correct errors. Then number 14, income tax authorities recognize accounts maintained under single entry system. Income tax authorities recognize accounts maintained under single entry system. Income tax authorities recognize accounts maintained under single entry system. That is false because we said single entry is only applied to sole traders and then partnerships, and they are not required by law to prepare what? To prepare financial statements. So they can only do it when they wish. Yes, so accounts maintained under single entry system are not recognized by the income tax authorities. So here the answer is false. Then number 15, in order to ascertain profit under statement of affairs, net worth method, profit and loss account is prepared. Nope. The answer is false. Then number 16, capital on any debt can be ascertained by preparing statement of affairs on that day. This is true. In case of opening capital, we shall use the opening figures, and then in case of closing capital, we shall use closing figures in order for us to determine the capital, but using the statement of affairs. Then the excess of closing capital over opening capital is a loss suffered during that period. When the closing capital is higher than the opening capital, I think it shows that it's a profit made, not a loss. Yes, so here the answer is false. And then question 18, statement of affairs is not accepted as evidence in courts of law. Statement of affairs is not accepted as evidence in courts of law, which is true. Yes, so that was all about section A. Let's go and see what section B is all about. Section B, they are telling us fill in the blank spaces with the correct answers. Question 1, they are saying under single entry system, a financial position. Under single entry system, financial position can be ascertained by preparing dash, by preparing a statement of affairs. By preparing a statement of affairs. Then question 2, credit purchases are ascertained by preparing. Credit purchases are ascertained by preparing the total creditors account or the creditors control account. Creditors control account, also known as the accounts payables control account. Yeah. Then question 3, bills receivable received during the year affect the bills receivable received during the year. They affect the total debtors account. Like when you're demanding some people and then they pay back. Yeah. So the debtors account will reduce it. So it affects the bills receivables account, also known as the debtors control account. So it affects the bills receivables account. Then question 4. Question 4, that's saying stock under single entry system can be determined by preparing. Stock under single entry system can be determined by preparing a memorandum trading account. Yeah. Can be determined by preparing a memorandum trading account. Then question 5, only debtors and creditors accounts are maintained under pure single entry system. Pure single entry system. Then question 6, Cash in hand at the close of the year is ascertained by preparing. Cash in hand at the end of the year is ascertained by preparing a cash book, also known as the receipt or payments account. Yeah, so by preparing, let me put the receipts, put it in capital letters, receipts and payments account. And payments account. Then question 7. Capital at the beginning of the year can be ascertained by preparing an opening statement of affairs. Yeah, we determine capital by preparing the statement of affairs either at the beginning or at the end. Yeah, so when we are ascertaining for opening capital, we prepare an opening statement of affairs. Then for question 8, profit under single entry system can be ascertained by a net worth or statement of affairs method. By the statement of affairs method. Then number 9, credit sales under single entry system can be ascertained by preparing the debtors control account. By preparing the debtors control account, we determine credit sales by preparing the debtors control account or the total debtors account. Debtors control account. Then number 10, bills receivable received during the year can be ascertained by preparing the bills receivables account. The bills receivables account. Receivables account, correct this. Then number 11, bills payable accepted during the year can be ascertained by preparing the bills payables account. Bills payables account is the same as the creditors control account. Yeah, by preparing the bills payables account. Yeah. Then number 12, bills receivable dishonored is debited to. Bills receivable dishonored is debited to. Bills receivables, like it's when you are demanding debtors and then they pay you. And when they pay you, debtors reduced by crediting. So when they pay you, you credit, but when you dishonor the payment, you do the opposite. Yeah, after dishonoring a check, you debit the bills receivables account because you are still demanding them. Yeah. So you debit the debtors account. You debit the debtors account. Debtors account, and you credit the bills receivables. The bills receivables. Yeah, then number 13, bills payable dishonored is debited to. Bills receivables dishonored is debited to. Like when you pay your creditors, you always creditors are what? Are liabilities, and they reduce by debiting and they increase by crediting. Yeah, so when you pay them, you debit the bills payables account. Yeah, but when the payment is dishonored, you do the opposite. You credit the account. Yeah, so bills payables dishonored is debited to the bills payables account. The bills payables account and credited to the creditors account. The creditors are increasing. Yeah, creditors account. Yeah, then number 14, bills receivables endorsed is debited to. Endorsed is like approved. Bills receivables endorsed is debited to the creditors account and then credited to the bills receivables account. Yeah, the bills receivables account because the receivables are decreasing and they decrease by crediting since the assets. Yeah, so it's debited to the creditors account because the creditors it's debited to the creditors account. creditors account and it's credited to the bills receivables account. Bills receivable account. Then number 15, bad debts previously written off and now recovered is dash recorded in the debtors account. Bad debts are those debtors who are likely not to pay, so you may decide to cancel them, but when you cancel them, then after they pay. Yeah, we do not record them in the debtors account because it's not reducing on the what? On the debtors. But when they are written off, we record them in the debtors account because they are reducing on the money that we are supposed to receive from the debtors. Yes, so here the bad debts previously written off and now recovered is not recorded in the debtors account. Then number 16, transfer from debtors account to creditors account. When you transfer money from debtors account to creditors account, what do? We debit the creditors account and then we credit the debtors account. When we transfer money from the debtors account to the creditors account, we debit the creditors account since it's reducing, creditors account, you're paying them, maybe it's reducing. Yeah, the reason why we debit it and then we credit. And then we credit the debtors account. Then when we transfer from creditors account to the debtors account, transfer from the creditors account to the debtors account is debited to the creditors account and then credited to the debtors account. The same thing. And then credited to the debtors account. Then section C, we are saying choose the correct option from the following. Question 1, single entry is an option A, incomplete and scientific, B, it's incomplete and unscientific, then C, complete and scientific. Single entry is incomplete and unscientific, so the answer is B. The answer is B. Answer is B. Then question 2, in single entry system, it's possible to prepare a trail balance, a trading profit and loss account, then a receipts and payments account. The answer is C. Receipts and payments account. It's what? It's the cash book. Yeah. So here the answer is C. Then question 3. Single entry is most suitable where? Option A, where cash transactions are not numerous. Option B, where credit transactions are numerous. Then option C, where both cash and credit transactions are numerous. Yeah, and the answer to question 3 is A, where single entry is most applicable where cash transactions are not numerous. The meaning of numerous in the English dictionary, numerous transactions. Let me find out. Numerous the meaning of numerous, it's like if people or things are numerous, it means that they exist or are present in large numbers. Yes, so single entry system is most suitable where cash transactions are not numerous, when there are not many. Yes, so the answer is A. Yeah, then question 4. In single entry system, profit is ascertained by A, opening capital plus drawing plus new capital introduced minus closing capital. Then B, closing capital plus drawings plus capital introduced minus opening capital. Then C, closing capital plus drawings minus new capital introduced minus opening capital. Yeah, and this is the formula for ascertaining for profits in single entry system. So the answer is C. The answer is C. Then we go to question 5. Capital at the beginning of the year is ascertained by preparing the opening statement of affairs. So the answer is B. Yeah. Then question 6. In single entry only, debtors and creditors accounts are maintained. Asset accounts, expenses account, and revenue are maintained. All accounts are maintained. All accounts are maintained. The answer is A. Only debtors and creditors accounts are maintained. So the answer is A. Answer is A. Then the last question, single entry system cannot be maintained by first sole proprietorship business, then B partnership, C company, then D all the above. The answer is company. Single entry system cannot be maintained by companies because they are required to prepare financial statements, and there is no way they can prepare them when they have incomplete record. So single entry, it's mainly for sole proprietorship and partnership businesses. So here the answer can see. Yeah, so those are some of the objectives in single entry and complete records. Yeah, thanks for watching. Let me save it.